All right, so this is our not our weekly backtesting slash Q&A. That'll be tomorrow, but this is just a mark review for today's price action, as well as a psychology stream at the second half. So if you got any psychology questions or things you're struggling with that you want to be open about, we can get those maybe solved today and fixed today. But I've got kind of some topics I'm going to talk about psychology wise anyway. So if you want to stick around for that, it'll be well worth your time. Appreciate you guys joining for now, but overall, I wouldn't say it was a terrible week. Pretty slow week for me. I only took trades um, on Monday and Tuesday of this week. Monday I had lost. Tuesday I had won, and Tuesday was a pretty decent trade, which that is posted up in the YouTube vids, both publicly and privately, if you want to see that. I did do a stream today, but I was unable to find any high quality setup that netted me a good move. So we'll cover the bias for today and obviously everything kind of from a higher time frame to lower time frame, and then we'll talk about the psych towards the end. But as usual, put any questions you have from today's price action or psychology stuff, put that in the chat and we'll go through it. But for today, we'll start on the higher time frame. Let's go to the weekly chart here. So I mentioned previously on Sunday, previous Sunday, that since we had NFP week, and it's August, you typically will see a seek and destroy or consolidation reversal type of profile. So we are expecting that on Sunday. You can go back in and watch that if you want. And I said that most likely the best moves were going to happen on Monday, Tuesday, and on Friday. So Wednesday, Thursday, I completely just sat out of the charts. Today, I did end up looking at it, but not a whole lot that was being offered. But for the specific profile, it's good to learn, kind of where the moves are going to happen. You saw Monday and Tuesday, and even on Wednesday, that internal stop run back and forth. Back up and down. Then you have the first news driver creating that high of the week, and then dropping back down and taking all of that sell side, which you could potentially look for bearish price action going into next week as well. If we get a good retrace back into premium and then continue to sell off to the July lows. But on the daily chart and such, we have Thursday making that high and then displacing energetically down. We have multiple sell side liquidity pools in the form of previous weekly lows. There's one right here from previous weekly low that was tagged up prior to the New York session. We've got these relative equal lows down here that you can see and here, and this is the weekly low right there, and then the same exact weekly low from Monday, the week prior to that. So plenty of liquidity, all in the form of very low resistance, all in here. And as Thursday just drops back down, goes through the opening price there, you can call that a change in state of delivery with displacement, and now you're looking for bearish price action coming into today. Normally you want to wait for NFP to release, and then anytime after that up until around 10 o'clock you look for an entry, and we'll go through that today. But with Thursday creating the high of the week, you normally will see continuation into Friday, right? Thursday, Friday will both kind of continue that direction, but also preferably into London close of Friday, meaning you want to see the low of the week preferably placed after 10 a.m. on Friday. So if we have not formed that low of the week going into the open, you want to see continued selling, or just kind of retracement and then a continued move maybe later into the day that'll form that weekly low. So paired with time and price, there's still some room to run for the New York session. Although maybe you see took out previous weekly low or wherever we're at, this is one requirement, right? Price is one requirement. You also have to incorporate time. So if it wants to form the low of the week, just like how it forms the high of the week, it needs to be at a key time as well as a key price. Okay, so just because we're running out this liquidity pool doesn't mean it's going to stop going. If it's not the right time of day, it can continue to go another 300, 400, 500, 3,000 points if it wants to. But until the time of day is correct, it will continue to expand. It's a very important topic that you understand, because without it, it's going to be much harder to trade continuation runs because of the fact that, oh, what if it bounces here kind of mentality. So that kind of helped defeats and solves some of that. But basically, I had posted this morning that I was looking for kind of that 4-hour sell side. First was right here, this 22,835 level, and then we had that previous weekly low, all as kind of continued targets. So on the 1-hour chart, we have midnight opening price delineated here, and kind of looking for how could we potentially find a sell setup going into those weekly pools. And you can also see the new week opening gap from 2 weeks ago as well being present there. So normally what you want to see is obviously some sort of manipulation near the daily high. In this case, we have the new day opening gap kind of being used there as a volume balance, but also as a PD array. You should also see SMT up there at the daily high. So if you look up here, kind of hard to see, but if you zoom in, this will be on an ultra low time frame, but between this swing high up here. No. All right. No, sorry. Kind of funky, right? Is it really SMT? You don't really have to say it is, but even if there's no SMT there, okay, and it's hard to see and probably not really existent, you have SMT at the current weekly high pretty clearly, right? Here, over and over and over again. So if you don't have that SMT at that short-term swing high that's being formed, not a big deal, because we have the SMT at the current weekly high that's going to be kind of validating this as the weekly high, right? Either way, as we're dropping into the New York session, we're going to look at this as a classic London protraction profile. You do not see, in this case, London manipulate. That being said, it still is a classic London protraction because of the fact that, or at least the way I look at it, is that London is making the high there. The entry opportunity is offered within the New York open session, and the close is happening and forming the low right there between the London close. So I look at this as a classic London protraction profile without that manipulation, which is going to be kind of confusing because normally you look at it like this, and this is where pattern traders are going to be cooked because of the fact that visually you may look at this as manipulation, not incorporating draw on liquidity. Draw on liquidity is the first most important thing. Bias is the first most important thing. So profiling is secondary. It's a secondary or tertiary kind of method of finding bias. You cannot come straight to profiles and expect to understand where the market's going. Or you can't just go to a 15-minute chart, look at the profile, think you know what's going on, and then build a bias off that on the New York session. You must look at the higher time frames before you go into profiling the market. So London there making the high, and within the New York session prior to where I'd be looking for a setup. Now, as we know with this kind of weekly profile and with NFP, the protocol is typically you wait for 8:30 onwards. So we're looking for setups between the times of 8:30 and 10 o'clock. That's kind of the kills, not the kill zone itself, but a little mini window, and you can actually break this down to 9:30 to 10 o'clock. That's going to be this segmented window within the kill zone that normally will offer a setup towards that draw. So I'm not looking at setups between 7 a.m. and 8:30. I'm not looking for setups right at 8:30. We'll let that news come out, do what it wants to do, and then if you can find a setup after that, that's the way that I look for it. So this 8 a.m. candle printing up, you have PD array SMT with the fair value gap here in premium. So if we look over on ES, trading up into the gap here, and then failing to trade up into it on NASDAQ, and then trading up into it on YM. So kind of a rare occurrence, but that is a true SMT. So you have PD array SMT, so it's failing to manipulate into this fair value gap on the IRL. So you have SMT there, and on a 15-minute chart, as you drop back into it, you have a 15-minute run on stops as well, and then a drop back through, and eventually a closure through. This right here is a pretty strong algorithmic signatures when you have this wick up, and the next candle closes all the way almost through that wick. Very strong algorithmic signature that's present on all time frames. So if I'm seeing this, on a lower time frame, that would be an entry on a 1-minute chart or a 5-minute chart. But this kind of closure you could see is just on a 1-hour chart, just basically a extremely bearish candle. So in the targets, you got this one, all kind of that we mentioned. 15-minute chart, trades up, manipulates. And then a 5-minute chart. Let's go over here. 5-minute chart, we have, 5-minute chart, run on stops. Then we have a change in the state of delivery through here. Now, it's definitely a weaker one, which is why I was having a hard time finding this soup entry. So I did not take this. I'm not going to say that I did. This is for my own, just like how we're both studying kind of what's going on too, so I can improve on my own trading. But we didn't really have any displacement through this swing low. So, and nor was there a gap on the 15-minute or the 5-minute. So I found it a little bit harder to find a kind of a breaker entry or a internal soup entry just because of what was going on here in this 8:30 and 9:30 price action. So normally what you see is it gaps through that swing low. There's a nice 5-minute gap or something and it trades up into there. Or even if there was a swing high on the 5-minute, runs that stop, breaks down, and you can get a nice entry off there. Wasn't really offered in this case, but maybe something to adapt to in the future. But so this short-term swing high then creates the swing high of the session between 8:30 and 10 o'clock there, and we're looking for the entries between 9:30 and 10. You have this high, low, higher high, this last manipulation leg here that targets this -2, -2.5, which lines up the sell side liquidity there, marked out in black, which is the same sell side we marked out before. You can see 9:30 comes up, sweeps out the buy side. There's not really any SMT there. I mean, it's very, very tiny SMT on the 1-minute chart. Can hardly see it, but there's some right here. So very tiny. And that's why I also didn't kind of take that setup there. That eventually breaks down, trades back up into premium of this range. It actually fails to trade at the premium, doesn't touch the order block. Then it displaces again, doesn't offer the fair value gap to be traded into, sells off a couple more times, then eventually the news tanks us lower, runs out the sell side, and now the low was formed post 10 a.m. onto a weekly sell side liquidity pool. So this would qualify itself as a potential low of the week or low of the day. So I was not able to see this entry here. I was waiting for actually this fair value gap lower to be filled. A fair value gap here with a potential breakaway gap and a bearish order block in here. So I was waiting for this to be filled into and then run lower before 10 a.m. Doesn't offer it. And then on the way up, it kind of a trace a little bit too far for me to be convinced that we're going to come back and take out that swing low, which is what I did on stream. Just kind of waiting for that setup. Didn't form. Trades all the way back up to premium. Closed off the charts at this point. Not expecting to come back for that low, at least within the New York session. So, I mean, kind of there's some entries in here. It's definitely harder, at least for me, to find an entry because of the fact that we don't have any good retracements. It's kind of this expansion profile where it's either failing to touch into PD rays you normally see, or it's leaving them open like we have here and here. And then when it does retrace, it's kind of into PD rays we don't really expect to see hold, like this order block here. Very weak in terms of what we classify to be a strong order block. There's no gap. Oh, there's a tiny gap actually below, but it does overshoot both the gap and the order block. It's within macro time, sure, but then where do you feel is a comfortable place to place your stop if you're getting in here? That swing high and target that low. It's kind of a scalp, right, for that late in the session. So at least for me, I found it not challenging, but just no trade, which is a win in my book. Even if I had lost on this, won on this, no trade, they're all wins because number one, it's a high probability day. Number two is towards the direction of my draw, which is bearish, and the session ended up being bearish. So as long as I was following an entry criteria on this, if I had lost, won, not taking a trade, still a win in my book. Still green on the week. So even if I had lost this trade or taken a trade that I lost, you know, it's not a huge end of the world deal. But in terms of price action there, it's pretty on par with what we were looking for on a Friday. That was kind of decent move. I actually wasn't able, I didn't really look through review the Thursday or Wednesday PA, but this being pre-NFP, this being FOMC pre-NFP and pre-FOMC, just not stuff I think is I don't really want to work those days, you know. It's going to be hard at price action. It's likely to lose or be stopped out or something weird going on. So I'd much rather just sit out those days and not work. And if it happens to offer a setup, then so be it, right? But I want to focus most of my attention and most of my mental capital on the days that I know are likely to give a high quality setup. Later into the session, we do a trace back into premium and then sell off one more time going into the PM session and eventually take out that previous weekly low. The second one we had marked out as well as the current daily low. You can see the low here being formed outside of the London close and closer to post 12. So in this case, the week, the day, the session are all lining up towards their draw. We're going to have longer expansions of both time and price. So your draw on time becomes further along inside of the day, right? So do your own rules contain if you're bullish selling below? Oh, if I'm bearish selling above? No, I don't use midnight opening price or 8:30 price. I mean, my best case scenario is if I'm bearish for the session is shorting above 9:30 open, but very rarely will I be using midnight opening price or 8:30 or something like that too as a hard requirement, because there's going to be a lot of times where that's not available. And when you're using midnight opening price, it's really to get the higher low of the day, and I'm not awake for a lot of times. That's going to be offering that higher low of the day to the tick, you know, above midnight opening price or whatever. So I don't have that as a requirement. In the best case scenario, I would love to have it, but same thing with 9:30. I would love to have me selling above 9:30 open. Does it happen all the time? No. So it's not part of my consistent rules where I need that as a requirement to take a trade. So yeah, I believe that we're leaving some all-time highs. I don't think it was unreasonable to expect that. All this kind of consolidation and weak push upwards, building all that generation of low resistance liquidity, even down to here. And I mean, even this mess we had in June, if you remember that, for the most part, it seems like it's building all of that up. So in terms of next week, I don't think it's unreasonable, especially if we have early news. Do we have early news? Let's see. For the trace maybe back at premium and then sell off again. Let me look at the news for next week. None. USD. Tuesday, we got 10 a.m. Thursday, 8:30 unemployment. What's up with all this unemployment claims? Unemployment. Those things create unemployment claims on a Thursday, just create those weird, choppy weekly profiles. So I'm not really sure what we're going to get next week with that news. I want to see how the first couple of days play out, Monday, Tuesday. And if we can get something good, then I'll be focusing Thursday, Friday of that week. I mean, to be honest, every day of the week seems reasonable. So I might have to just keep an eye on all week. But yeah, I mean, I could see this being, at least for a short term, just trading back to the range, maybe consolidating, and then going back for this later in the fall, right? Like September or October. Going back up for that, you know, pretty seasonal shift. So if we're tracing back into the season, maybe September, October forms that seasonal low, and then we go back up into the high, maybe in the beginning. Why macro time is so strong? There's algorithmic functions that and signatures, not signatures, but algorithmic checklists that basically go off at those key times. So the checklist is to offer fair value and then to seek liquidity, either in the form of resting liquidity or engineered. So, you know, top of the hour, those are going to fire off, and there's specific schedules that these things have to be filled by. So if it's getting close to the time it needs to be filled by, then you have a macro time that's going to be used. Say it's already met that requirement, or something else has gone on, then those checklists is not going to have as much of an effect as it normally would. All right. Weekly and monthly fair value gap. Yeah, I saw the monthly down there, right in here. We got a monthly order block in here too, and a weekly order block. So yeah, down into here and down into the order block, right? Could see that. Still a good 200, 300 points. So yeah, I could see it coming back down into this, maybe even down to that swing low. We'll have to see. But yeah, not too bad. I mean, if I had to pick one setup from today that I could have seen in the morning, potentially be this one in here. Would be this 1 minute SysD. Let me actually mark this out here. This 1 minute SysD with displacement. If I had to pick one, I'd like to get this one in the future. Trades back up into the order block. Respects it, drops back down with displacement. I don't think it's unreasonable to take that as a limit order, maybe on this candle, and then put stop at the high. Like right here, market order, swing high, and then entry and exit. If I had to pick one, that's probably the one that I would pick. I probably would not have seen the soup in hindsight. Probably wouldn't have liked the SysD either. And if it traces up into here, I would have probably seen this order block and the displacement through. That's most likely the one that I'd be looking for. In hindsight, if I had to pick one, it's also not a bad risk to reward. Yeah, or maybe I would have lost today. Taking this continuation. I like this as well. But just back into 50%, and then it comes back up and kind of consolidates. Why and when do you look for displacement? I mean, there's multiple different ways, but typically, if we're leaving a PD array or trying to invalidate a PD array, that's the two times that, along with others, that I'll be looking for displacement, like very quickly. So if we're respecting a PD array, we should speed away from it towards that draw. And that kind of confirms that that order flow is going to hold. Or if I want some sort of swing low or order block or fair value gap or whatever to be displaced through, it'll tell me that it wants to quickly and energetically get through that PD array. So that's either going to get me in a trade or validate my trade where I can either trim my stop, something like that. So displacement is very key for me to get in. Without it, I'm not going to get in any trade. Even if I'm taking a turtle soup, it needs to displace and take that swing high and then displace away from it. And there's got to be energy and momentum within that move. If it's lethargic like this and just kind of chopping around, it's more likely to be accumulation or a fake retracement, something like that, than it is to be an outright reversal or a disrespect of whatever PD array I'm looking for. So very crucial in all PD array setups and market maker setups, but very much so when I'm using invalidation kind of trade. So, or invalidation entry, taking a SysD or an IFVG, something that's breaking price and not an entry like just a standard fair value gap entry like this, right? It doesn't need to displace into it. I'd rather just see it displace away and then form a fair value gap like this and then reuse that gap and sell off again. Does that make sense? But it is something that your eye has to pick up on. But yeah, that kind of, I mean, there's not much else I wanted to, terms of mark review structures and technicals and stuff like that. Not much more I wanted to review from there. There's some cool stuff I guess you could look at is the weekly high being put in within the range and then the weekly low being put in past this range. So nice precision in terms of the week. Psych wise, I just want to talk about maybe skipping out on days and losing trades and things like that. But if you've got any psych questions, you can put them up in the chat there. But is there anything I missed, I guess, in terms of today's price action that you wanted covered or had questions on? Who do you play in Rivals? Oh, I don't play it anymore, but when I used to play Winter Soldier. How do you qualify potential high and low of the week? time. So I'm looking for news drivers preferably. It has to line up with some sort of weekly profile that I'm using. 4-hour or above PD array, either in the form of a gap or a swing low or swing high. And then SMT. I'll write this out on the board here. So I want to find a news driver, preferably news preferred. I want it to line up with a weekly profile that I'm anticipating or I can read as a result. I want there to be a 4-hour or above PD array, preferably in the form of ERL or IRL to be tagged into. I want there to be SMT, and then displacement away with some sort of a market structure shift, change in the state of delivery, or IFVG. So all of this together, if you see this at any point in the week, normally that's going to be used as the high or low of the week. Now, emphasis on this weekly profile and emphasis on the higher time frame draw and liquidity. So HTF DOL is going to be extremely important because sometimes you'll get the news formula low and the displacement and whatever, but if it's not in line with that higher time frame draw or the weekly profile, then that will be very hard to qualify as the higher time frame draw. Now, when weeks are consolidating or we have seek and destroy, it's going to be much harder to see that higher low of the week been put in. But when it does have a high impact news driver throughout the week, or we're already kind of trending in the long term, then you will see those high and low of the weeks are very easy to trust and also to predict, where then you are maybe potentially taking a soup on the weekly low or weekly high. Yeah, that's on exactly. This is what I'm talking about. So you get the 4-hour SSD, you get the news driver, you get the displacement away, but number one, the higher time frame draw on liquidity is number one. So in this case, we're bearish for the week. All liquidity is lower. And then number two, the weekly profile. The weekly profile for this week was a consolidation reversal / seek and destroy. That's the one we were looking for on Sunday. So it's going to be confusing because you'll see Monday and Tuesday, it's constantly taking back and forth. And it's only until Thursday do you see that reversal playing in. Which another reason why I potentially want to be skipping these 2 days. I was not looking at trading either one of these days, and you kind of know that sometimes coming into the week, just the weekly protocol that you're using. But the best thing is these weeks are difficult because it's been consolidating for much longer than I've seen in the past. But the high probability days will always be consistent, meaning you'll know when those days will be there from the economic calendar. You'll know what entry types you like and entry techniques you like on those days, and they will line up with a weekly, daily, or session draw on liquidity. So even if these weeks are consolidating, it's hard. I agree, hard to find a bias, but you need to understand that on the highest probability days of the week, things will start to line up. Like look at Tuesday of this week. I still think if you were to trade this week, Tuesday is the best opportunity. Very precise, everything kind of lining up, draw on liquidity, and down to the time of day and down to the 1-minute price action. That's the kind of day that I want to trade. And that'll be there one time a week, every week, minimum. Sometimes it's 2, sometimes it's 3, sometimes it's 4. So becoming a sniper, waiting for that setup to walk through, I'm just sitting there waiting. I know when to set up my bench. I know when to set up my sniper and wait for that prey to walk by, take it out, and then you don't gotta hunt for the next couple of days. You don't want to waste time, precious time, as well as just your energy and mental capital on days that you don't need. Is your strat a risk? Is your strat a risk more or less trades? Or do you actually just trade? No. I genuinely just don't trade low probability days. I don't use I'm probably a bit more aggressive in my risk, but like this week, I'll give you an example. Monday, I had my normal risk. Monday, I took a loss. I actually got slipped on Monday, so I had taken 150% loss. So my loss plus 50% more. Because of that slippage, I had to cut my risk on Tuesday. I mean, I had to cut my risk anyways because I took a loss, but I cut my risk to 50%, and then I got a 13R on Tuesday. So that takes out that loss and puts me into profit. And then I'm back to using my normal risk size Wednesday, Thursday, Friday if I want to. But Wednesday I took 0 trades, Thursday I took 0 trades, Friday same thing. It's just when you have, I have access to capital. You know, when you have access to a decent amount of capital, it's not like you're forced to. Sometimes when you have extremely low capital, it almost seems like you have to trade every day just to meet your goals or whatever you want. When in reality, you should be thinking the complete opposite. So always think that you have the most amount of capital and you only need one trade per month. You know, and if you can get one trade per month, that has the opportunity to pay out your entire monthly goal. So yeah, you should absolutely be a sniper. I'm not. Number one, I don't want to be trading low probability days when I could be doing absolutely anything else. To be honest, I love trading, but it's not at this point in my life. It's not. It doesn't require 8 hours a day from me. And nor do I want to lose, nor do I want to waste mental capital on days that I don't need. You know. Do you have a video to qualify potential higher probability days into depth? Not really. The PDF kind of does that, but I don't have a video describing how to find. I mean, there's a slight document. If someone can forward the document, I think I put it in models and reviews or something. I'll see if I can send it to you. Just remind me after the stream. There was one little page, but not. It was regarding the economic calendar and things to look for in terms of high probability days, but not high probability setups. The setups are completely different. Like the whole methodology I used for finding high quality setups is the PDF that I released, but there's a different document that covers spotting actual high probability days. I feel like trading more stuff like standard deviations, higher day, low day makes some more sense with these choppy days where New York does little to nothing. Yeah. Yep, exactly. You gotta have a somewhat of a scalper's mindset in here, and you have to have variance in entries, right? The macro time is not going to be what it used to in spring and in the fall. You have to adjust and be flexible, right? So I've been taking more 930 entries as a result. Just trying to get either a scalp at 930 or just taking 930 soups if they offer it to me. And that's been pretty consistent for the most part. But I was gonna talk about psychology, and yeah, 930 soup has been hitting. It's been paying the bills for me. I don't know what I would do without 930. The psychology of losing. We're going to talk about that today. Kind of, this is directed towards. So market review part is over. So if you want to leave, feel free to. I'm going to yap about psychology, but this is more targeted towards the individual who, maybe is close to trading, and I mean when I'm not close to trading, but close to being profitable. I'll list out kind of the characteristics, and everyone will go through this. So if maybe this is not you today, it'll be you in the future, which is where you have a pretty good understanding of the market in the first place, meaning you're able to find a bias pretty consistently, at least 50% correct on your biases. You know how to find entries that are good, and you don't have to be winning every single trade, but statistically, you probably would be profitable, meaning you have average around a 2R and you have a 40% win rate. Anything above that, you are profitable. So if you have a 3R, it's like a 25% win rate, whatever it is. That's the people I'm talking to right now, where you have almost not mastered anything, but rather understand enough where you should be profitable, but now it's just psychology sometimes that holds you back from that goal. So what is sometimes the jump that you can take psychologically that will help transition you from being in that state to potentially a profitable state, right? And there's a couple of things that we can look at, and I'll go in depth about each one. But one of the problems of that we face in that kind of scenario is the fact that we're in this constant learners environment and learners world where for X amount of time you've been learning, you've been implementing new things, and you have identified yourself as someone who's potentially not there yet and you haven't made it yet. And there's probably some results that speak for that. Potentially you may not be passing evaluations, or you may not be making the money that you want, either in the evaluation or in payouts or whatever. So how do we transition from that kind of area to profitability? And what's the mindset, I guess, that takes us from one side to the other? Because I think at that point it is just a mindset. There's not a lot of technical things sometimes that you need to understand. There's some risk management that probably needs to be in place. But how do we make it so risk management and trading in general becomes automatic, where I do not want to have to be thinking about constantly fighting against my emotions or fighting against thoughts that I have to be impulsive, whatever it may be, but simply to become someone who doesn't have those issues or doesn't have those voices, in a sense, trying to be impulsive. So the first thing, and I think the hardest thing for me personally, was kind of submitting to a system, right? Submitting to a process, and as a result is kind of giving up control, where I wanted to constantly refine and build. And like I said, and when you're in that learner scenario, you constantly want to get better and better and better and better. And this idea, that you're not at the level that you want to be at, so therefore you can't take things seriously, or even subconsciously you feel like you're not at that level that you should be at, that maybe a profitable trader is at, and you're not. And then as a result, you have this kind of control complex where you take a loss, you want to get back at it really quickly and get back to break even or get back to whatever. And if you do have a risk management system, it almost feels like when you take a loss, you're like, oh, actually, I can just increase my risk today and be better, or I can take a second trade or whatever. And then you're almost kind of creating rules as you go in trading. That's never a good idea. So submitting to the process and giving up control, especially as a guy, I feel like guys kind of struggle with this a little bit more. This is really number one, the first thing you have to understand, and we'll go in depth about this. And the second thing is kind of this identity versus discipline. And we'll go through kind of both of these today. But I think there comes to a point where Mark Douglas talks about this, where there's either forced learning or active learning, where you either choose to change or you're forced to change and forced to adapt. There probably comes a time where you keep blowing accounts, not passing evals, not passing fundeds, whatever, and you figure out that your shortcuts and your way of thinking is not going to work. And it's consistently not going to work, because every single time you try or you break a rule, sometimes it works for about a couple of days and then boom, your account's gone, So develop a process, number one, that you trust. You have to design your parachute. So as you are following and submitting to this process, this needs to be designed by you for you. Okay, I cannot give you a process or a risk management system or a trading plan that if you do not fully believe in, you're going to follow. As soon as it creates a flaw or a crack in that armor, you're going to be very inclined to take control and try and fix the solution before something else that you may not trust kind of has an opportunity to potentially help you. So you need to design the parachute. You need to design the risk management system. Last week we talked about designing a pregame routine. You need to design the kind of mechanical entries. It may not be one entry, but maybe a plethora of entries that you use. But each of these things needs to be designed look through, and you need to 100% be on board with that process, right? If you're using a risk management system that is too aggressive or potentially too conservative, you are not going to want to submit to that because of the fact that you don't inherently trust it to get you out of drawdown and get you to where your goals are. Okay, so you have to design the parachute that you know whenever you pull it or you get into drawdown, it is going to work. That is the number one utmost priority, because without belief, you have absolutely nothing in trading. So design the process, design the risk management, have a very cut out system and run simulations on that risk management. I suggest you do this if you've never done this before, which is basically make a risk management system. Meaning, okay, my max risk for the first day is going to be, let's say 1,000 on demo. And then I'm going to cut that in half. And then I'm going to use that again. And then I'm going to go to 250, 250, 250 forever, right? This would be like an example of a risk management system. And you need a 2R to get back to your original size. What I want you to do is estimate what your win rate is. Say it's around a 70%. Go into ChatGPT and give it these parameters. Right? Or you don't even have to calculate it. Simply just look at something like a risk management kind of table and see, okay, if I have a 70% win rate, what's the chance of me going into 5 losses in a row or into drawdown of 6 losses in a row, whatever it may be. And actually see what those chances are. And if I were to take 3 losses in a row, how far would I be in drawdown? What kind of trade opportunity would I need to potentially bring me back, pump me up to my risk manager, or potentially back to my equity high? And not thinking in terms of equity high and equity low and in profit and drawdown, but thinking in terms of this. Okay, this is, in a sense, all that matters. Okay, it is very, very hard for someone who's new to trading, or potentially if you're in the trading environment in general, to detach yourself from the money. It is tied to your survival. It is tied to your health and prosperity. So understandably, it is very hard to detach yourself from. But your goal, as any profitable trader will tell you, is to completely not care about outcomes. They will be painful. They are kind of annoying. Like anytime I'm losing, it's annoying and it's slightly painful. Okay, it's discomfort, right? But not to care about that, but simply to care about your next step. Okay, if you've ever played a game, okay, whether it's a video game or soccer or whatever, anytime something goes bad, the more that you dwell on that mistake or dwell on that win, the greater the fall, right? If I'm doing a rep playing football or playing soccer or playing, a game of CSGO or whatever, you lose a round, what do you say? Next round. Next, I'm going to fix this. But you spend very little time dwelling on that past round or that past goal or that past score. And you go to, what do I need to do in this scenario to make sure that I win this round or this game? This is a minor setback, but there's something that I can do to fix it. And in that sense, you're, number one, you're not forgetting the outcome. You have to regard it in some sense, but you regard the outcome and then you move past it into the actionable plan. Okay, the actionable plan is your risk management system. So you have to completely think in terms of this. When you have a win, loss, whatever, you almost have to completely not look at this, which is very hard to do, understandably. But it's easier to do to not pay attention to this when you have something that you know is going to work in the long term. And this process that's being designed for you, by you, allows you to submit to it. So as a scenario, let's say you take a loss. Okay, let's just deal with the first loss. First time you're using this system, you take a loss. How is that going to feel? Number one, you're going to feel obviously defeated in some sense and probably feeling either unjustly stopped out or looking for a potential next setup. But the best thing you can do is simply to pause, right? Simply to pause and look at, okay, what actually is the logic here? When you do take a loss, sometimes it's hard to do this in real time when your amygdala is firing. But logically, you a lot of times only need a 2R to get back to where you were. Where tomorrow, if I were to take a trade and I've cut my risk in half, I need a 2R or better to get back to where I was. And if you have a goal of being green every day, if you have a goal of being green every week, it's going to be impractical. For me, my goal is to be green every month. I think that's pretty reasonable for where I am. I won't have a green week every week. I'll try and push for it, but if it doesn't give it to me, then I'm not going to demand it and crash out if it doesn't happen. But I'm pretty confident that every month I will be green. But if you take an L, you need 1, 2R to get back. And to me, when I look at this, this makes it so that loss isn't as scary. Where I know that my job then is always and will always be to, number one, take a good trade, and to, number two, manage my risk. That's the only two jobs as a trader, to manage my trade or manage my risk and to take good trades. If I do that consistently, whatever drawdown I have will take care of itself. And to number one, obviously to submit to the process and to give up control is to also acknowledge the fact that your job is to manage drawdown. Your inherent job as a trader is to manage drawdown. So if you're uncomfortable in drawdown, after you take a loss or string a loss, or if you're in a trade and you're dealing with drawdown, you're not cut out for it. Okay, that's just your job. Now, this doesn't have to be painful. Your managing drawdown does not have to be painful. If you know that you take a loss or a handful of losses, it only takes 1 or 2 good trades to get back to where you were. And if you're thinking about getting back to where you were, it won't happen, but rather thinking about, okay, where's the best trade? So sometimes as a result, what we think about is the opportunities that are there in our mind. So we go from taking a loss and we think about the what ifs. We think about what's going to happen tomorrow and how fast I can get it back and how uncomfortable it is to be in drawdown, which is extremely important into kind of segueing into why you want to journal. You take a loss, if you journal for about 3 paragraphs, you're not going to really feel that loss anymore. So journaling is a coping mechanism, a healthy coping mechanism that helps take away, number one, the pain of losing and the pride of winning. Takes away the pain of losing and takes away the pride of winning, where it brings you back to the process. And it's kind of self-hypnosis, but in a sense, you're blunting the edge of that outcome and bringing you back to the center, which is, what's my job? So do not try to rush out a drawdown. The more you think about the loss and how big of a problem that loss is, the more you make it a problem. As much as you can submit to this, as everyone says it over and over again, there's no secret sauce. But I think that this kind of segues into now your identity, where if you believe, number one, if you wholeheartedly believe that you have a good model that will churn profits over the long term, not the short term, if you believe you have a good model that churns profits over the long term versus the short term, you can manage your risk, and drawdown and profit is the same. It's just the process. You will be a successful trader. It's when you do not believe that one of these these three things are true that you have a self-fulfilling prophecy. Meaning, if you do not honestly believe that you can manage your risk, you won't manage your risk. Right? When something goes bad, something happens that you're not expecting, you're instantly going to draw to clicking the button and making that pain sometimes worse. If you don't believe you have a good model, well, then when you take a loss, you're going to be very tempted to overtrade or over leverage to get back that kind of gap in your own mental. If you believe that drawdown is an issue and drawdown is irregular and profit is something that is always guaranteed to you, every single time you get a loss or you're red, you are going to want to get back to where you were, right? Even if it's a good trade. So if you do not believe wholeheartedly that you have these kind of characteristics in your own trading, it will not happen for you. And I think that if you focus more on this rather than this, identity gives you habits. It gives you discipline, right? If I believe that I'm someone who is clean, I'm going to take a shower probably more than 1 time a week. Shower? Shout out that Indian guy meme. Anyways, if you believe that you were someone who wakes up on time or is an early bird and your identity is shaped in that, you're going to wake up early. And it doesn't feel like a discipline, doesn't feel like work. Okay, you want identity, you do not want discipline, because I think if you fix your identity, you fix the discipline that as a result. It doesn't feel like work, right? You don't want managing risk to feel like every single time you have to restrain yourself from taking a trade and then reluctantly switch your risk down and then sit out for the day, and it's like pain where then you can't even go to sleep at night because you know that the next day you're going to take a trade and probably be a losing trade because it's not what you're supposed to be doing. So focus 100% on building your identity as a trader and believing these things. Now, it's sometimes hard to believe without seeing, as Jesus said, but you are going to do way better where if you have this process that's designed for you and you 100% believe in it, it is much easier to come to these conclusions. And as a result, your identity is going to be fixed. You believe you're a profitable trader because you believe these factors, and you're only focused on these two jobs. And you accept the fact that your job is to manage your risk, manage your profits, take good trades, and you're going to submit to that process. Everything, for some reason, figures itself out. The less you kind of put into it, the less you care about it, the less you try and control it and manage every single little thing, something that you cannot control, the more that you're going to feel pain. The more that you can kind of control it, right? The less that you kind of just sit hands off and let the numbers take care of itself and you're just the operator, even if you make a mistake, even if you make a string of mistakes, you still can get out of drawdown and still take consistent payouts and still hit your weekly and monthly goals. It somehow works. It doesn't make sense. With every other thing, it seems like you need some active input and active fixing and this chronic and constant control. When in trading, once you have that good system and you're able to read the markets decently, you kind of just give up control and you give up this care. You have a carefree mentality because you know that setup will be there every week. And if I were to sit out for a week, sit out for 2 weeks, you need to have the mentality of saying that if I were to sit out for this time, I can come and on a Thursday in 2 weeks, take a trade, and that will bang out my entire monthly or weekly goal. Now, you may not have the P&L to support that, right? You may not have the payouts to support that. But if you can think that and operate with that mentality before you're able to get there, it comes much quicker. And that directly goes shaping into identity, right? No video on YouTube and no short or reel or TikTok is going to give you a 10-second clip on discipline that you don't already know. It's just going to keep telling you what you already know. And it's going to feel further and further away that you're missing something, when in reality, you're not missing anything. It's just reshaping how you think, from thinking from that profitable, that really, this is kind of directed to those people who are really close, but it's when you just give up control and you submit to it and you stop trying to micromanage everything that it kind of just becomes much easier. Okay. If you have a good way of trading, you have a good way of finding a bias, and you have a risk management system that works, meaning you have a 0.2% chance of hitting or blowing that account, right? You can sleep at night. You can take a trade and not worry about the outcome. So you have to find kind of the sweet spot of everything, the Goldilocks zone of your risk management, the Goldilocks zone of maybe how many trades you want to take throughout the week. But that's why I can feel comfortable skipping price action on Wednesday and Thursday, not even look at it, and feel like I'm not missing something, right? If you do not genuinely believe in the fact that you have a good model or a good way of finding a setup, then every single time that the market's offering you a move, then it's going to be very hard to leave that and believe that you have what it takes to successfully turn profits over the long term, because it feels like that's the move that you're missing. That's the move that is going to happen this month. There's not going to be any setup after that, right? And even if it's, say, there's a day that is a high probability day, but it doesn't offer you a setup or it offers you a loss, you trust your drawdown, you trust your risk management, you trust your good model to provide that consistent outcome no matter what. Good, bad, PA, losses, wins, no trades, whatever. This is kind of the solution. So you're as an end result, you are going to not care about outcomes, and you're going to stick to process over everything. You've heard it multiple times before, but that submitting is one of the most, it's the hardest thing because it feels like you're not doing anything, or it feels like you're that system is not going to support you, but that's why I think you have to design it and build it. Looking more and more, I'm starting to come to the conclusion that the system for entries is important because I keep on bending the rules even a little bit and it backfires hard. Exactly. You can have no consistency that way either. You don't know what goes wrong. So you got to have a very consistent entry model just because of the fact that if you vary yourself in taking trades, different trades all over the place, you don't feel like you have a good model. You may feel like you can read the market, but you don't have a consistent model that you know is going to be there. So sometimes as a result, we end up taking different models and different trades that are not in line with what we know to try and cope with that. Every other psychological problem is a coping mechanism for some sort of gap in your beliefs. Every psychological problem is a coping mechanism for a gap in your beliefs or an illusion that you're telling yourself. This market is offering endless opportunities, right? You can go to the 5-second chart and count how many fair value gap setups it's offering you. You may not trade the 5-second, but this is how many entries it's offering you within the day. Countless, endless opportunities, right? So if you believe that about the inherent nature of the market, it's going to be much easier to sleep at night and find those setups, even when it may not be on the exact day that you're looking at it. The last 2 months, I had profitable months. This month, I messed up because of greed, just because I wasn't satisfied with how much I was winning. I altered my trading style and messed things up. Yeah, that's another problem, right? Is the feeling something. You get to a certain point where, especially if you started to grow your capital, it doesn't feel like you're winning anymore because that same winning feeling of whatever monetary amount that you normally have doesn't feel like anything anymore. So then you chase something. Same exact thing there, right? You want to feel something in trading. Trading is meant to be boring. It really doesn't give you a whole lot. It's just a job at the end of the day. That's kind of the conclusion I've came to. It's just a job that for some reason pays you exponentially more with exponentially less work. That's kind of the way you got to treat it, you know? So it'll definitely be weird, but chasing a feeling from winning a trade or chasing a feeling from how many profits you can make, you'll find that there's no end. There's literally no end. And I realized that there was actually not any amount of money that I was chasing because I had the biggest loss of my career when I realized, okay, there's something. Basically, what I would do is I would mess up, or even if I wouldn't mess up, I would get consistent payouts. And then I had this biggest loss of my career because of the fact that I was chasing what number is going to be satisfactory for me. So I realized it was never about a money amount. It was never about winning or being green over and over again. It was about satisfaction. It was like, how much do I need to be satisfied? So then you have to really look at that and be like, okay, well, there's not really going to be any number or amount of wins that's going to satisfy you. You always want the next thing. That's the point of that kind of satisfaction. You put your satisfaction on the outcome. It's not this outcome that's going to satisfy you. It's the next one. And that's an impossible feat to have in trading. So you have to shift your satisfaction to almost just doing your job and doing it properly. It's a very hard thing because it doesn't really give you that same dopamine hit as green or making a lot of money. But just because of the fact that it's it will pay, you still get satisfaction out of it. But I think it's way more satisfactory to lose a trade, lose a second trade, and then take a good trade with that half cut risk and blow your equity high out of the water. That is way more satisfying, and it actually rewards you a lot more than trying to push for green or push for. So I'm chasing that feeling. I'm trying to chase where I take losses in a row and then I cut my risk and then take a crazy good trade off that. And then I blow past my equity high just based off that one good trade because I managed my risk. To me, that gives me so much satisfaction because then it reinforces that my risk management and that my process is going to pay me over the long term, where there's no amount of money at that point that kind of will deter me from that, because that actually feels like it's challenging and it's difficult. And it's like something that you can strive for because it's a feeling that you couldn't have done before, but you realize that, okay, that safety net, that parachute is going to protect you and will, in a sense, make trading just carefree, because as long as you take good trades, you manage your risk, you're perfectly fine. The whole thing where you've been wanting from trading this whole time is what you're getting with the consistent winning months. So why are you looking past that and wanting? Right, exactly. You almost become numb to it, which is it's a weird thing as well. You become numb to the payouts and the profits that you're making. That old you was like, it almost seemed impossible to make that amount of money or to get that kind of consistency, which is completely normal. It feels like you're kind of disconnected or disassociated. It's something that you kind of have to deal with. But when you get on the other side of that, trading becomes really easy because it's just the same thing kind of every day. And the challenging part of it has kind of disappeared because you just release control from it and you find satisfaction and kind of just joy from taking it day by day. So if it's a day you don't get a setup, you can leave that and go do something else and enjoy your day. You don't have to worry about it. If you get a setup that loses, you leave it. You don't have to worry about it. Setup that wins, you leave it. You don't worry about it because you're looking at the law of large numbers. How many setups in a month, that average, is that going to be green? Or in a year, So you can read as many psychological books as you want. You can watch as many videos as you want, but you'll come to the same conclusion, which is this. So if you're on that kind of brink of profitability where you have a really good model and you probably feel like you should be profitable at this point, it is simply to just submit. That's the tip I would tell you. It's just to submit. Figure out and see that if you were to do this the proper way, does it actually give the results that you want? And if you do manage your risk and it puts you super far into drawdown and maybe you blow your account from that, then it's actually telling that you have to adjust something and you know what you probably have to adjust at that point. What's your average trades taken and feel good about it? What do you mean? Like per week? Per day? A month? It can vary anywhere from 4 to maybe 12 or 15. Anywhere from 1 to 3 times a week I'll be taking the trade normally. So whatever, if it's 4 trades a month, if it's 15 trades a month, I don't really care. I limit myself to normally 2 trades per day. Yeah, only high probability setup. Yeah, I mean, I'll take. I have no. All of my setups that I take are high probability. I have no problem with trading low probability days. So the setups that I take on low probability days are still high probability for that specific profile. But I'm not taking scalps at the 1350 macro towards the short-term sell side just because I can. I'm not interested in that. I want daily ranges, session ranges, weekly ranges if it gives it to me. Like, I want my freedom. So I don't want to be glued to a chart for 8 hours and then get 17 trades in and walk away with a break-even day. Like, what's the point of that? But yeah, anywhere from 1 to 15 trades a month. The lower the better. If I can take 4 trades a month and that's my entire weekly goals each time or monthly goals each time, then that's great. But there's no amount of trades that I'm shooting for or trying to stay below. It's whatever that offers, whatever kind of amount of setups it offers, I'm taking it. And that's all I'm concerned with is the setup there and if I should take it or not, It doesn't matter the outcome, but I have to make sure that I'm taking those. Otherwise, if I fail to take them, then that's where my problems are going to be. So I'm not worried about the outcome of the trade before I take the trade. I just know that I have to jump into it because that's what my model says. And my job is to take that trade and be the operator. I'm not in charge of the risk management. That's going to take care of itself. They all have their own departments. I'm working in my one department. If I just do my one job, everyone else will take care of their own jobs. And then we all work out, right? But yeah, you could do that with funded evals, live. It's all the same. I'll trade my eval slightly more aggressive, but my funds in lives and stuff, that's all. It's all the same trading. Also, when it comes to trading, were the things you had to accept in your model that probably weren't the biggest fan of, but it made you profitable, so you stuck with it? For example, you wanted a higher risk reward strat, but realized you're profitable with 1 to 2, so you ran with it. Like, is there a balance you have to keep with your model, or is it all to your liking? At this point, it's all to my liking, but it is definitely, I think there are some things that are unsatisfactory in the beginning, right? Like when I was just trading the ATM model back in 2024, I would maybe, my biggest trade would maybe be like a 4 or 5R, and I maybe get that not as common as I'd want. So I think when the results start speaking for themselves, it's kind of easier to go with that. You're like, okay, I don't really care. If at the end of the day, look at it like this: if I'm a billionaire, you're a billionaire, you've got a 2R on average, and I got a 4R on average. No one's gonna care. I think we think that other people care about that more than we should, and that's an ego thing, and that's a problem with community sometimes. Is we show how big our things are, and it becomes this who's got the biggest type of thing. You don't want that. So to say, I wish I could have traded turtle soups more often. I wish I could have had more than a 1.225 risk to reward on average. So in the beginning, there's going to be things that you settle with and have to deal with, but you have to understand that that'll always improve. So I don't know if it's settling as much as just kind of trusting in the process of I'm constantly and always going to improve my model. So this is where I'm at right now with my own trading, right? Especially if you're 1 or 2 years in. If you're averaging a 2R or a 3R, that's perfectly fine. But you have to trust and believe that a year from now or 2 years from now, you're going to be taking average of 5R trades, or maybe you're every now and then you're going to hit a 10R trade or whatever it is. But at this point, maybe it's the same, right? Maybe I want to, like, my goal right now is be able to take one shot, one kill every week, and really start weekly profiles and take 80% of that weekly range if I can. I'm not there yet. It'd probably take me some time to get there, but I know that's going to come. And I'm perfectly fine with where I'm at right now, even though it may not be where my end goal is. Still, I'm doing perfectly fine. So it is a balancing act in some sense, but sometimes it's a demand to be perfect, and that's that control complex that we have. What size eval account do you trade with? I don't have any evals right now, but I normally just go with the biggest one that they have offered. So if I'm on Top Step, 150K account. But if you're starting off, I suggest the smallest one. Right, exactly. Yeah, that 4 to 8 trades per month. Because it feels like you're not doing anything. I think it feels like you're not doing anything, and it feels like you're going to be missing out. There's two things. Number one, it feels like, okay, this person's trading. How come I can't be trading right now? But we fail to forget that the work in trading is patience. The work in trading is to do nothing, because 90% of people can't do nothing. They want to be taking it every single day, every single move. And the number two is just it's this self-confidence and belief thing, right? You have so much self-confidence and belief in your trading that if you see someone else taking a trade or taking multiple trades in the day, you know that there's enough food for everyone, right? That person can take their trades. I can take my trades. It's not like we're fighting and competing for liquidity. It's always going to be offered. So let them do their thing. You're going to do your thing. You're both going to eat at the end of the day, you know? So it doesn't matter if, if I can constantly, if you live like that, it's going to be impossible to take any good trades, because you're going to constantly be comparing yourself to what this person does, or what you missed. You constantly look at the market at what you missed and not what you're doing or what you had. It's that unsatisfaction kind of thing that we are talking about earlier. But I think a lot of it is that self-confidence where you just know, to me, it's the other way around. If I can take 4 trades a month and hit my monthly goal, and you trade every day and hit your monthly goal, who's actually the better trader? You could argue they both are. So it's like, that's what I'm saying, that kind of carefree, just take your hands off, let it do its thing. You trade when you want, when it's reasonable to, and it'll work itself out somehow. If you actually manage that with all these consolidation weeks, I'll give you a Nobel Award. I don't think it's too hard when you see it, when you start getting used to it, but I think I only had one red week throughout this. I'm trying to remember. I'll have to look. But that's why you just focus on those highest quality moves. Right. Yeah, it's very uncomfortable because we want that. But it's a combination of this identity and beliefs in yourself and trust in the model. Trust and self-belief is like your go-to for submitting. You can't submit to it if you don't believe it's to be designed for you by you. Indicator for kill zone and macro times is the sessions by Nephew Sam. So look up sessions by Nephew Sam, click on the three dots here, and then go to move to new pane below. So sessions by Nephew Sam, move to new pane below, and that'll give you this. All right, so I don't want to yap too much more. We're going to have more of this tomorrow for the weekly review and for another psychology / Q&A stream. So if you got any more that I missed or any psychology / technical questions you want to bring for tomorrow, feel free to do that. Overall, not a terrible week. So make sure if you don't attend those, you got something else to do, that you're reviewing your trades for the week and you're also reviewing your journal for the week, and keeping yourself honest with maybe your flaws or things you have to work on, and also patting yourself on the back for the things that you did well this week, even if it was not a lot. All right. So take care. Do the things that are necessary to succeed as always. And I'll catch you guys soon. Peace.